following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners had a fun and exciting and hopefully profitable trading week. In fact, 2 weeks while I was gone, you guys were able to hold down the fort very admirably in my absence.
No, we weren't. It was not the same. It was sad, and we missed you, Mark. I missed you.
I had a nice single tear running down my cheek as I listened to you guys, and I felt that like my children had finally grown up and they could do it all on their own. Of course, I'll have to have a few separate words with you, Mr. Sebastian. I heard some of your comments, and so our editor will be deleting you from all future shows. But I do want to take my hat off to Uncle Mike Tusaw for doing an admirable hosting job. It is not easy to sit in the fun chair and keep the dialogue going and all the other fun things we have to do and keep the recording going and everything else. So he did an admirable job. I think he missed his second career in options-related broadcasting. So there we go. Uncle Mike, unfortunately, could not be here today. He is on assignment in the mountains, catching some nice wild salmon with his bare hands and taking a nice relaxing break after his hosting duties wore him out from last week. However, we are joined by the greasy meatball himself, the man from the pit, I guess you could say, Mark Sebastian from OptionPit.com. How are you doing today, Mr. Sebastian?
Great. I'm doing great. So, I have to admit, I've been shocked by this market. I cannot believe we only closed down 15 handles in the S&P 500.
Yeah, showing some resistance.
It's insane. I mean, I'm sorry, but Standard & Poor's just came out and said they're putting they're got a negative outlook for our credit. How in the world how in the world are we not down 50, 60, 70 handles? Even crazier, bonds were up today. Explain that to me. Treasuries went up in value today. How does that happen? Doesn't make any sense.
We will get to all of it, sir. First, let me introduce the other part of our dynamic trio here today, our thunderous trio, perhaps you could say. Good old Rob Kurzakowski, Mr. K himself from Options Express. Mr. Kurzakowski, how are you doing this fine and hopefully for you guys busy day?
I'm actually just trying to catch my breath here. We had a pretty busy expiration cycle for a change. Last few expiration cycles, we kind of market didn't do a whole lot on Friday and Monday, and it had a lot going on today.
Yeah, you could say that. And, of course, and with our triumvirate complete, I shall be Octavian, or perhaps Augustus. It may be easier for you, and you guys can fight it out over who is Caesar and who is Crassus. I think, Sebastian, you make a good Crassus, I think. So I
want to be Mark Antony, and Rob can be Cleopatra. You could be if you're going to be Octavius.
Actually, that would be the second triumvirate. So we would both be incorrect, but that would be a story for another time. All right, and with that, we will close out the old banter block and roll right into the trading block.
I love that we actually call it the banter block.
The trading block.
All right, and welcome to the trading block. This is the section of the show where, in case you haven't figured it out by now, we talk about what is trading today in the broad markets. And it was, as the meatball alluded to earlier, an intriguing day. We're down for most of the day after S&P came out and decided that they had a bearish outlook on our credit rating for government credit and government debt. Of course, we did. After the nadir of the day around the mid-session, we have since rebounded, and as he alluded to, the S&P closed down about 14.5 handles, the Dow closed down 140 points, the NASDAQ closed down 29 points, and the VIX cash closed up a meager 1.66 points, or 10.8%. So it was indeed interesting to see how, like we said before, Mr. Meatball, you can't derail the bulls. Nothing will convince them that the end is nigh.
The long-term treasury is the one that blows me away. You know, how in the world is TLT up, and how is that possible? That's like, that just doesn't make any sense. You know, that's like, there's a big recall on the Toyota Prius, and we're bumping up the price of the Prius by $10,000. You know, you just don't see that. It's that's the part that really kind of blows me away is, is somebody in there just buying up bonds? Was the government in there buying them? Is that what was going on?
Obama was on the bid and lifting offers. Mr. K, you're a big fixed income guy. What were you seeing on the bonds today?
I think it's just the panic that Greece may default. Spain's having to pay a lot higher interest on their long-term treasuries than previously many had expected. So as bad as the U.S. debt outlook is, Europe is actually worse. So that's what we saw in treasuries today. It was the kind of the lesser of two evils, if you will, between if you're going to stay in fixed income, you may as well stay in U.S. treasuries because Europe is still a bit dicey on the fixed income front. So that's all we really saw. I mean, there's nothing in no news out there is in any way, shape, or form bullish for the bonds.
No, not today.
No, but at the same time, with the equity market, selling off, it was kind of traders kind of sometimes get into. And even fund traders, I think you get lazy instead of looking out at all these different investment vehicles. And considering the run that precious metals have had lately, they're like, well, if we're going to play defensively, we'll try to get a little pop in the bonds and then probably move right back into equities. But yeah, that's the only thing that could explain why we were higher today.
You got to be an interesting character to move into bonds on a day like today for going for defense after the impending downgrade and the possibility of higher rates going forward and all the other fun stuff that tends to work against those bond bears, those bond defensive players.
It's like putting Jay Cutler back in after that eighth sack on that game against the Giants.
Yeah,
so
just doesn't make much sense.
No, it's terrible.
Yeah, well, and I actually heard somebody say, well, at least they didn't downgrade our debt, because I don't think S&P, I don't think any of the rating agencies, unless things get really bad, would ever make that bold of a move, just because, you'd start genuine panic among traders if you actually did that. So, the fact that they didn't downgrade, the U.S. AAA credit rating isn't because U.S. deserves a AAA credit rating. It's just they're worried about what would happen if they did downgrade them.
Mm-hmm.
Yeah, I think this is probably as close to a precursor to that step as they could take. They can't just come out one morning and say, okay, we've cut the AAA credit rating. That would be without some sort of precursor. So that's what this was today. This was the precursor to that. This was the warning shot, and And apparently it didn't scare that many people. As it started off very scary, and then people tended to just digest it and move forward, apparently. And move defensively into bonds, apparently. We'll show those S&P people. We'll buy bonds. And then, of course, we also had some other big moves. Euro down quite a bit today against the dollar. We had some other moves. Citigroup this morning came out with their earnings that were pretty much just in line, or actually a little bit above what the analysts were looking for. And we know we love those analysts on this show. So the stock pretty much hovered, unched on the day. So that was some mildly bullish news to offset the pretending downgrade of government debt. And, of course, we talked a lot about Citi's reverse stock split on here, and we're hearing a lot of the good old high-frequency guys are really, really moaning that, and the exchanges as well, that this reverse split is really going to cut into their revenue. I mean, they're saying Citi accounts on the equity side for about 10 to 11% of volume on any given day. So
but all that has been people stealing payment for order flow.
Yeah, so
I don't understand how the exchanges have made money on that movement. Explain that to me.
Yeah, I've seen some numbers trying to quote how much the exchanges are, and they're obviously getting per contract fees, but these people are gaming the fee schedule, essentially is what they're doing. All that volume on the options side and on the stock side is fee arb for the most part. And the exchanges tend not to make a lot of money on that sort of business.
Yeah, I don't get what they're thinking. This sounds as brilliant as the dividend play game out of the Philadelphia exchange. You know, just, hey, volume matters, not making money. It's silly.
Exactly, and that's kind of what this is, I think. But yeah, so the exchanges are bemoaning the loss of this, and I don't know.
I'm not.
We might have lost.
I'm really excited. I think the volatility is going to go way up in Citigroup when this thing reverse splits. Now, here's my thought. I think all this gaming has been keeping Citigroup super range bound. Okay.
Oh, definitely. It's been one of the most range-bound stocks you can see, which is why these high-freak guys love it. And their vol is minimal. They have
they've been keeping it. They've been the guys kind of making it happen. And when this thing reverse splits, all those high-frequency guys are going to go, and all of a sudden, a real order in Citigroup is going to move the market. You know, and the next thing you know, Citigroup is going to be up. Probably down a couple of points, and vol's going to be way up. I've been looking at that Citigroup straddle, like the June 4.5 straddle at 38 cents seems like a steal at these vol levels. That's just me.
I will admit that we are long that level at that strike as well. We had the same conclusion over here. It was too tempting to resist. And as my I'm not one to overly extol the virtues of buying volatility, but this one
is going to be. I mean, when this thing reverse splits, it's going to go from 44 to 42 or 41 in no time, and pay for itself like that.
What else do we have? Tusaw and I talk about Cisco, but he's not on. So
Cisco's a piece of junk. I don't know why we waste our time.
They cut the flips. That's why it makes it funny.
Yeah, I'm gonna flip them.
And the stock gets crushed. Don't say that to Tusaw. He's a big Cisco bull. But,
oh yeah.
He has upside. I think around the 19 level or more.
He better enjoy that ride down to 12.
Maybe that's why he didn't come on today. And Mr. Kurzakowski, you want to do a quick commodity rundown for us?
Sure. We saw crude oil actually give back some of the recent gains. Saudi Arabia came out. Said that the crude oil market is oversupplied. Couple that with the negative growth outlook from the S&P, and we have a down day. After the market kind of ran up, I think we're seeing some of that crude oil gold movement between speculators, where people are bailing on the crude oil market and heading back into to gold. As you did see gold rebound a little bit. Not a whole lot, just a whole lot of kind of turning around, not a lot of news on the commodity front today.
And with that, we will close out the old trading block and move right into the odd block. The odd block. And and welcome to the Odd Block. This is the section of the show where we discuss the interesting and or unusual options activity that's been lighting up the tape today. And we have a couple interesting names. And our first name up in the old Odd Block is Chelsea Therapeutics International Limited, CHTP. Your favorite. Huge market mover. Closed today, $4.86, up 88 cents. This is a North Carolina-based biopharmaceutical company, so we love the drug stocks on here. And they do an average of about 700 contracts a day or so. Lately, they did over 11,000 today. And see the big pop to the upside in this one following the notice that they are filing for a new Parkinson's drug called Northera. So look at all these drug names, by the way. Northera, Viagra. You know, they spend millions researching these names that are exciting yet inoffensive at the same time. Options activity today, we saw good volume. I said over 11,000 contracts, which is well over its average daily volume. We saw the June 5s lighting up the tape with the bulk of the trading, over 3,500 contracts going up. On that strike, 85% of them lifting offers. While we see the June 4 puts doing similar type volume, but they're all hitting bids. So bullish activity across the board. Also, we saw the June 5s. People were buying them for about 42 cents. So the stock obviously has to gap up to 542 for those boys to break even. And aside from this news, it hasn't been that great of a year for Chelsea Therapeutics. They were down almost 50% at one point as their trials were not looking very good. But apparently this news and the upcoming earnings announcement on April 25th have the market looking pretty bullish on good old CHTP. Now, Sebastian, I know you trade this one every day, so what's your take on this one?
Bullish speculation. That's my theory.
You going out on a limb on that one, are you?
I know. It sounds crazy, but it's just people betting that some good news some good stuff's going to come out. But we also saw some strangle buyers. It looks like if this thing goes bad, this thing's going to $1. So that's the way it sounds like to me.
I'm looking here. We also saw about 3,000 of the June 5 puts going up as well.
Yeah, that's what I was saying. This looks like if this thing misses, they're going out of business. The way it sounded like to me. The way the options are playing.
That's why we love these drug stocks. It's 100 or it's 0. There's very little in between for these guys. So yeah, play. If you're looking for a nice volatile one with some earnings coming up and a big drug announcement potentially in the near future, then check out good old Chelsea Therapeutics International Limited. I love the names of these drug stocks too. They're all, they fill the.
They're also pleasant.
And then moving on to our next and final name in our abbreviated little odd block today is good old AMD Advanced Micro Devices. I like this one. This is the name that Sebastian has actually heard of. Well, we saw a pretty sizable spread going up in AMD today, tied to stock. And our initial look at this looked like it was going to be a three-legged spread, where essentially was a trader buying an October put spread and then selling the October 8-6 put spread 7,500 times, and then selling the October 10 calls 7,500 times against that to finance it, and doing all of that tied to stock. And it looks like it was an interesting way to structure a nice quasi-straddle, you can almost call it, where he had nice upside potential, a lot of downside potential at very minimal cost to him. He then tweaked it by adding a fourth leg after the fact, and this fourth leg was in July, and which makes it even more interesting because he's moving outside of his time frame. That leans closer towards pure bearish spec part of the trade, where he really is loading up. He bought 7,000 or 7,500 of the July 9 puts as well for prices. Looks like around $1.22, the bulk of them. That turns this, what was a mild bullish and strong bearish trade, into a very bearish trade.
Yeah.
And, at this point, that extra leg kind of throws the whole thing out of whack for me. He's pretty much just pulling on.
He might have been, maybe he was he closing that part of it or something?
I'll think? There is 7,000 open interest on that strike, so.
Yeah.
That in and of itself, this is a wacky one, people. So go out there and dig through
do your own research.
Do your own homework, damn it. No.
Darn it.
But essentially it started off, and most people tracking it as a three-legged spread, which was very interesting. And then that fourth leg, he might have actually been closing. We'll have to go dig up in that and see exactly what that is. But a sizable bearish activity going up right now. in good old AMD. And you guys been watching AMD at all lately?
You know, they're a buyout target, I think, yes, but I don't know. I think they're going to get bought out, and it's not going to be for some spectacular number, and it's going to be with some computer manufacturer and la-di-da, and no one's going to care.
Yeah. Well, they had an interesting run this past year. If you're looking for a nice volatile name, they've certainly fit the bill. They got clipped after the CES because their CEO mysteriously resigned. Never a good sign for a stock. Then they had a big pop afterwards, people saying some of their products aren't as bad as they thought, and their roadmap for their Fusion products aren't as bad as the CEO's departure may have led people to believe, and now it's kind of been hovering on the downside of that again, down around the 8 level ever since. And so they do have earnings coming up, I believe, on Thursday. Yeah, after the bell on Thursday. So this is an interesting one to watch. If you are an AMD trader, you can do some long-term speccing on the potential of, as Mr. Sebastian suggests, a long-term buyout, and you can do some, upside verticals maybe out in July or October to spec on that, or you can just do the old popular shorting downside put spreads that a lot of our listeners like to do, because this one has been relatively juicy lately, and the premiums are looking right here, the May 8.7 put spread you can do in here for about about 24, 25 cents. That's not bad, especially with earnings coming out in a few days. Not a bad little quick spec if you want to limit your downside risk and take a quick spec on upside in AMD. And Mr. K, anything else you want to add before I close out this abbreviated odd block?
And it seems like the most logical buyout would it be ARM architecture, however, or ARM, but I don't think ARM has enough cash to buy out AMD. So
yeah, that would be interesting. Definitely, I agree with you. That would be huge. Yeah.
You think private equity would be interested in them, taking them private? Maybe.
Oh, private chip manufacturer. That'd be interesting. I mean, in terms of a private equity guys, because they like to flip things,
Yeah,
they're not buying and hold.
The plan is to bring them public again, but go in, hack it up. Cut the earnings for a little bit, be willing to not be basically a slave to making a couple of pennies here, a couple of pennies there. Really do some good work, and then or just sell it in pieces to other places. That'd be the other.
I imagine they probably would sell it in pieces. They they have that good video card section. They'd have the Radeon stuff. That's worth some money. And the processors are still good, but they're competing more on the lower end of the spectrum than Intel is these days. So they're not really challenging the big dog for the top spots anymore. Of course, who knows how much money there is even in CPUs these days anyway. I mean, it's a commodity business. And so going after that market, I imagine if private equity did come in, they probably would break them up as opposed to trying to take them down and flip them a couple of years down the road or even sooner.
Uh-huh.
I think, the AMD and Intel they're not adopting that ARM architecture that you kind of need to get into like the mobile handset where there actually are pretty decent margins. And I mean, it's going to get commoditized anyway. But just to get their chips into more devices, and there's some talk about Intel, trying to do that. I don't see that really happening. It doesn't seem like the Intels and AMDs are really want to buy licensing fees or pay licensing fees to switch to a different architecture to put themselves into more devices. So. I mean, it's just kind of a slow growth type industry. Just keep pumping those chips out and selling them in your lower end computers.
Yeah. Who knows? Nvidia might be eating both of their lunches in the near term if they keep going with this Tegra stuff, unless Intel buys them out first.
Yeah.
That might be the way to go. GPUs versus CPUs. All right, and with that little bit of techiness, we will close out the old odd block, and we will roll right into the express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the portion of the show where I take a nice, much-needed break, and Mr. Sebastian has another.
That's what you need is more breaks.
And Mr. Sebastian hits another 8-ball with his slinky, and good old Rob, he takes over the show and turns it into the Fixed Income and Commodity Hour. So, Mr. Rob, Mr. Kurzakowski, what do we have in the old Fixed Income and Commodity Hour today?
Well, actually, on the bond front, we haven't seen as much paper coming in, trading bond futures, or even on the TLTs and TBTs and the Treasury ETFs of late. We have seen quite a bit of paper coming in as far as silver, SLV. There was a little bit of a kind of a curiosity just this past week. Somebody put on a massive butterfly in SLV out in July.
Everyone was talking about that one this week. Yeah.
And that's quite a. And I think that it seems like the more bearish bets you get out there, the more the silver market just keeps on running away from you. I don't know if it's kind of the we're seeing some of even the biggest silver bulls just kind of almost with these run-ups. They're trying. It seems like it's almost scaring them out of the market. We've seen some people that were actually repositioning themselves in silver have either really lightened up or have actually moved into gold, just because it seems like silver is running up almost $1 every single day, and I don't, that's with the big bearish bets, the kind of the wild option plays that we've seen come out there and with size, and the fact that the chart is now completely parabolic. I think that at least some of the more prudent and cautious traders are starting to bail out of that, and we're seeing a lot more credit spread type of strategies coming in, and people actually going into debit spreads. We've actually seen some put spreads come in, bear put spreads.
They're so infrequent that they're worthy of note. I love it.
Yeah. Just because the metal traders just seem to be bulls by nature, where you see your other instruments, you really have quite a mix of traders. It seems like the metal traders, it's almost become with some of these ETFs, self-fulfilling prophecy. All these people buy they buy the ETF, which creates physical demand because ETF has to go out there and actually buy the metal. We've seen a lot more metal trading and then both lighting up positions and kind of rethinking his strategies.
It seems like almost another world where I was sweating credit spreads I had down the 26 strike, but that was only a few months ago. It's unbelievable how this thing has just been off to the races ever since. Unbelievable.
Yeah. And on the futures front, we're actually some of this doesn't make sense because gold has been moving forward, but it's been, progressing a lot more slowly than silver and copper, which is industrial metal, silver being the kind of the hybrid precious and industrial metal. Copper's actually come back quite a bit. And we've gone from, a period where in the first few months of the year, we had, all these types of production issues. We've had, in Chile, they had massive rains and they flooded out some of the mines, and now China is buying less copper, and the mines are coming back online. So it seems like the miners may actually finally catch up to demand for at least a little while. And you figure that would weigh on silver, and it's just not. On some of the commodities, we've actually seen a lot more bearish activity than we've seen in quite some time. Sugar and some of the other soft commodities are actually seeing bearish activity. Cotton actually made it had some technical setbacks, closing below the 50-day, kind of confirming a downward breakout from a wedge on the daily chart. So it seems, but we haven't really seen the massive short positioning. I think traders have just been burned so many times trying to pick the top in that cotton market, where we're seeing some put spreads come in. Any type of futures activity has been in July. I think a lot of the run up in the May contract was just people getting squeezed out of shorts, where we saw just too big of a gap between those two months. But we haven't seen this type of a bearish order flow in some of the soft commodities in quite some time. And on the equities front, it's been really mixed. Like softs and some of the other commodities, we're seeing a lot more bearish kind of orders coming in for Apple, which we haven't seen in quite some time. And with Google and Apple just getting pounded recently. Obviously, Apple has earnings coming out on Wednesday, so we have the usual positioning before the earnings announcement. So we had a little bit of an uptick in order flow, but it hasn't been as bullish bull bias as it has been in recent weeks. And some of the pegging strategies were the butterflies, the condors, the calendar spreads, that people have, and just over the last month, we've seen those types of orders, that type of order flow come down quite a bit. Nobody knows where it's going to go. I think we're seeing a lot more uncertainty, and of course we've seen some people bailing out of Citigroup pre-reverse split. We saw quite a few articles come through on how it's just not only bad for exchanges and order flow and brokers, but how it could potentially be really bad for investors if it can affect dividends down the road, and as far as dividend yields on the stock. And remember, they're very early days of post AIG reverse split. AIG absolutely got walloped, and people are fearing the same thing is going to happen with Citigroup once it goes reverse split. Yeah,
we were talking about that earlier in the trading block, with how that's, the high freak guys are really lamenting the loss of this $4.50 range bound Citigroup that they could play in and do fee arb all day long.
Yeah, it was like a money printer. That was
it was like Lucent back years ago. I mean, Lucent was just the ultimate trader stock, and Citigroup is one of the last notable companies that's trading in that range. So now we've seen AIG go, and now Citigroup is going to go, and it's going to have some implications on the option side, and because people are going to limit their exposure. We're already seeing people avoiding the longer dated options. Because sometimes the leaps just get pounded, and then as you get closer to expiration, obviously there's no meaningful volume in any of those options, and it's going to cost you a lot more commissions to trade out of that stuff rather than just waiting for the reverse split to happen and then positioning yourself for yourself at that time. So a lot of just kind of a lot of repositioning has really been the theme the last few weeks here. With Bank of America and the bad earnings that they had, we saw some of the financial stocks that were getting a little bit more love from traders. Longer term traders kind of just selling calls against it. We've actually seen people, wait for these options to expire this past weekend, or even got out of their covered calls and just, headed for the hills, late last week after that. There's not as much trust in the financial stocks the last few days. So we've seen people bailing on the financial sector a little bit, and even your investment banks, they actually had pretty good earnings of late. It just seems that we're seeing a little bit more of the financial stocks taking a back seat to some of the defensive plays. So now.
So a notable day at OX then, where we're seeing bears and silver, bears and apple, people getting out of city, a definite reversal of all the stuff we've been talking about for the last few months, definitely.
Yeah, and I think that it may not be just a full scale. I mean, obviously with some of the smaller option accounts, I mean, you just can't take a gamble on that. Even larger accounts, people are just lightening up on those positions. They maybe got a little bit too heavily weighted in those stocks, and now it's a good time to rebalance. Now that there's some other sectors that haven't been performing really well over the last few months, although those sectors are far and few between. We've seen people kind of spread out a little bit more than they did, which is good. That's a sign that they're at least thinking about things, because when you get too concentrated into too few of the positions is when a sharp correction can really have a negative impact on your account.
Well, Mr. K, thank you for that. I think that was actually surprising to a lot of our listeners that people are rolling out of the old stalwarts and maybe positioning for something new, which is a nice change of pace at the very least. And with that, we're going to close out the old Express block, and we're going to roll right into the listener questions segment.
Listener mail. Listeners write in.
And welcome to the question block. This is the section of the show where, surprise, surprise, we answer some listener questions. And I'm glad Rob is on the show, because as the resident tech man over at Options Express, he can answer this first question. And this is pulled from our forum, our good old friend Jersey Boy in there. As you can imagine, a lot of people are doing their taxes. I think Mr. Sebastian is doing his as we speak on the show. And don't forget that Schedule D, that third page there.
I literally have to leave at 4 o'clock so I can go sign a bunch of documents. So, good times.
Fun stuff. And
hey, that 1 day of interest on my $300 that I owe the government, that adds up.
It does. You got to get that.
0.25% of 1/365th of $300 is a lot of money.
Well, Jersey Boy asks here, regarding tax day, his post is titled, "Why won't Options Express calculate my Schedule D?" He says, "I'm cranking away on my taxes today, and I'm frustrated OX won't simply generate my Schedule D for me. They're not included in the list of brokers that will import directly into my H&R Block software. They also don't export into those formats. They only export into Money, Quicken, or Excel. They make matters worse. They make you buy Gainskeeper if you want to have their platform calculate your Schedule D for you, but then didn't auto-populate the form. I had to fill it out by hand. So he wants to know, why isn't tax reporting integrated into the OX platform?" Rob, if you want to take a stab at that one, go ahead.
I mean, we automatically populate into Money, Quicken, and Excel just because they happen to be very standard formats. As far as why we don't populate it or we don't import directly into H&R Block tax cut, that's a very good question. I can bring that up to our marketing and our tech guys here. I'm sure that there's some kind of business relationship deal with H&R Block that some other brokerages have.
Perhaps maybe it is a licensing thing. They want exclusivity on there or something.
Mm-hmm.
Yeah, so that
you guys do a bunch of complicated stuff, and that that could be part of it. So yeah,
and Gainskeeper is actually very good at that. if you do 30 or more trades, you can give our customer service center a call, and we can add Gainskeeper to the account for you at no charge. And
that 30 or more per month?
No, 30 or more in the previous year.
Really?
So if you did 30 trades, you get Gainskeeper, and just give our customer service department a call. They can set you up for that. Gainskeeper does pre-populate those forms for you. However, you do have to run through the query. Sometimes if there are things that don't match up, or there are problems, say you transferred positions in from another brokerage and they come in with a zero cost basis, that's going to cause a flag. So you're going to have to actually go in there and input those values. And the only other part that it doesn't pre-populate for you is the name and the header, and that you should be able to type that into the form.
Okay, so it will auto-fill out the schedule fee and stuff then. Okay.
So
that's what he wanted.
Express offers a lot of different things. Good, yeah.
Yeah, it does pre-populate those forms for you. The first thing it does, just to make sure that it doesn't give you bad information. So sometimes if you have corporate actions, you have reverse splits and positive splits, and maybe the system just isn't sure of those, it'll bring up a little flag. And again, things with zero cost basis will bring up a flag. So for those, you'll have to go in and actually manually correct that. Our customer service department, very good at being able to assist you with that. And more often than not, it's just a click through and entering a couple values, and then it will fix the form for you. And that's pretty much any software you deal with. Whether it's better to have software with checks and balances than the software that automatically picks up zero cost basis.
That's true. That's definitely true. Yeah. I think one more quick one before we close this one out. We got our other guy here from the forum, goes by Complete Beginner. He wants to know, is there any way to listen to the show live? He says, I know you guys record on Mondays and Thursdays. Is there any way to listen to those live recording sessions? I'm sure there's a lot of interesting stuff that ends up on the cutting room floor, including about half of Sebastian's comments. I added that myself, actually, not him. But yeah, we've been toying with that idea for a little bit now, Mr. Complete Beginner. And I think the best way to do that right now, instead of giving out our Skype handle for everyone to join willy-nilly, is you guys contact us either through the contact form on the Options Insider, or shoot an email to questions@theoptionsinsider.com, or give us a direct message over on twitter.com/options saying you're interested in that, and send us your Skype handle. And then make sure you're available on Mondays and Thursdays at 3 p.m. Central. And we could add a select handful of people to be a sort of quote-unquote studio audience for the show. You can hear all the fun, interesting segments we do in between, and you can hear why I'm usually laughing when I do the show. The transitions into the next section, because something bizarre and weird usually happen during the sections you people don't hear. So yeah, if you're interested in that, send us your Skype handle, and we'll see what we can do. All right, and that's going to do it for the old listener question segment. And with that, we're going to roll right into Around the Block.
Around the Block.
And welcome to Around the Block. If you haven't gotten it by now, this is a section where we discuss what's coming up in the future trading sessions. And there's a lot on the horizon. We got housing starts tomorrow. We got existing home sales on Wednesday. Good old jobless claims on Thursday. And then in terms of earnings, lots of earnings on the tape this week. My good old favorite, Chipotle, CMG, they're coming out on Wednesday, I believe, after the close. Apple, of course, everyone's favorite, and Rob, the firm that keeps Rob employed through trading activity. Apple has earnings after the close on Wednesday. My good old buddy Intel after the close on tomorrow, actually. And then Southwest is coming up on Thursday, and Ford is before the open on Thursday. So a lot out there to take your pick from, guys. What are you guys watching over the coming week?
Apple, you name it. It's all earnings. It's all everything. That should be that's all I'm gonna be looking at is earnings.
And of course S&P downgrades.
And S&P downgrades and lack of market participation in scary news. I'm gonna be watching. I do think that this could turn into something. A downgrade like this, if we get something moving, then maybe things. I'd be real interested to see what happens. Let's just put it that way. All right, I'm going to be very interested. So,
what about you, Mr. K? What are you watching?
Well, obviously, as we're heading into a time of year where we're getting more and more earnings announcements, obviously your big heavyweights are the ones that you really want to kind of key on. Apple's kind of heading into an important time now, because not only do they have earnings coming out, they have a new lawsuit, which is kind of it seems like all technology companies are technology/litigation companies now. So they are either suing or getting sued constantly. So the in-app purchases is now going to become a hot topic issue, and to possibly make short work of the lawsuit, they may have some sort of at least hint at possible policy changes there, although I don't think they'll do that on the earnings conference call. And obviously the re-weighting of the Qs, or the NASDAQ 100, I should say, the beginning of next month. That's already had a little bit of a negative impact. It's with the rebalancing of that portfolio, it's going to be interesting to see how some of these stocks jump around. Microsoft getting a little bit more weight, and it seems like we always get a lot of unusual activity going into to some sort of rebalancing or a time where we get a lot of stocks added to an index or rebalancing of an index. The housing data is going to be really important. Going into after some of the encouraging reports, the consumer spending number was good. The jobless claims number was not good last week. We're going to see how consumers are starting to if consumers are starting to buy houses again, but the chances of really positive outstanding numbers are very slim at this point. But that's right. Pretty much
that's good. All right, and that's going to do it for the Around the Block segment, as well as this episode of the Option Block. I want to thank all of my cohorts for joining me on the show today, and starting with you, Mr. Sebastian. What is going on over at OptionPit.com?
Well, I am going to be giving a free webinar next Wednesday for TheStreet.com. You can go to my website to get more information. I'm also, of course, have the free blog. We're still running all of our anniversary specials. If you have any question about our anniversary specials, you can email me, mark@optionpit.com, or, give me a ring at 888-TRADE-01. So feel free to give us a call.
You heard him. Operators are standing by. And
there you go.
Mr. K, what is happening over in Options Express Land?
Actually, this Wednesday I have our Espresso webinar. It's our inaugural Espresso webinar that we've been planning for ages now with Mike Zaremski. We're going to go over just a handful of markets, but we're going to go over some of the technical indicators that we use, and of course have a nice Q&A session. So if you want to sit in on that, it's 2:00 Eastern, and bring your questions. Other than that, we have the all-in-one trade ticket has been kind of moving along swimmingly at this point, and I think we're going to have some more enhancements with the all-in-one trade ticket rolling out very shortly. Just some more advanced order types that are not currently available.
All right, and if you're in the Chicago area and you're interested in high-frequency trading, then by all means swing on by tomorrow. I'll be talking at the World Research Group Conference about all that fun stuff of high-frequency trading. Unfortunately, ours is not free like Mr. Sebastian's or the stuff going on over at Options Express. But if you're into that kind of a world, I imagine the gateway fee won't be that much of a burden. And it's going on right now, so I need to skedaddle out of here. But we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.